Alrighty. Wait a minute. Didn't I just see you guys? Good morning, everybody. Welcome back to another episode of Market in the Morning. Hello, friends. Hello, traders. Hello, everybody. I hope you're all doing well. I hope you're excited for a great trading day. Just coming back from the Chart Fanatic stream. We did a great breakdown. We're going to do the same thing here. Smash the like button if you're ready to make some money, guys. It is Tuesday, August 25th. Smash the like. Get ready to make some money because Market in the Morning starts right now. What's up, guys? What is up, everybody? What is up? Elsa, good morning. Famous, good morning. I am, what's going on? Uncle Banks, what's poppin', my G? Christina, hello. Charles, hello. Sans, hello. Dr. G, what's going on? Piyush, good morning. Jessica, hello. Charles, Tazzy, everybody, hello. What a warm welcome. I love to see it. You guys are amazing. Let's get into some markets. Let's get ready to go live. The lab's going to be joining us very shortly. Who's ready to make some money today, man? I know I am. Let's start right on the charts real quick. See what's going on. Ryan, what's up, Ryan? Hello. Yo, Yusuf, what's going on? So first thing I do want to take note on gold is I do want to see if we could find some support somewhere down over here on GC, whether it's a sweep of pre-market low or we do just try to hold this demand zone. Now, because we do have some other higher lows within this area, you guys know what I call it? I was calling it this just the other day about low-hanging fruit. We have all these lows, all this liquidity to be taken, all this volume to be taken in the market. I want to see us sweep those areas and start to reverse back higher. Now, what we saw in gold recently was we had those areas to take out. This was that long trade we took at that double bottom. We had the low-hanging fruit to the upside. And what happened when we broke those levels? We broke those levels and we squeezed. So we chopped our way higher, chop. Finally broke the level. The volume triggered a squeeze, and we popped another 40 points on gold. So I'm looking for the opposite reaction now, where I want to see those levels get swept inside this demand zone to give us enough volume to reverse back higher again. And that's still with the same overall trend. So that is great. Samuel, what's going on, man? Good morning, guys. Phenomenal. Who's ready for a great day, man? I know I am. This is going to be good. So gold, we are looking for bullish. We can take a look at our market tool over here. Take a look at our bias, GC. It does say reversal risk. We could click Y. U.S. intensifies Iran sanctions on energy and finance sectors. So what do I want to do seeing that type of headline, seeing that type of what could flip? I want to take a look at oil. So let's do CL. Let's see what's going on with oil. And bang, we're moving lower on oil. That helps support some longs on gold. That's a great sign. It also does help support some longs on ES and NQ as well. So we will be careful on that end too. Amazing. Look at that. Oh, nice. There we go. So you guys remember I marked that line in the sand area on GC. We broke it. We held it for 2 days. And then we failed right back again. So now at this point, if we are looking at oil, what do I see? What do I see off of these areas? Well, I see that now at this point, we might be trying to create a lower high, a lower high, lower high, lower high, lower low, lower high, lower high. Now the question becomes, do we sweep this lower low on oil? Energy costs come lower, and we start to get an even stronger shift to help support gold longs, to help support NASDAQ and S&P. This is exactly what we're going to be looking for, and it gives us that extra vote of confidence because we're using MRKT on top of it. Fantastic. Dollar is coming down to support gold bullish momentum. Beautiful, guys. Amazing, great breakdown, great noticing that. And look at this. Pakistan Munir aimed to create opening for Iran-U.S. talks. Okay, that's also a positive. Great, look at that. Coming out right now, right here on Market in the Morning. I love it when they know we're live and they set out headlines like that. It's very, very generous of them. Obviously, they're doing it because they know we're live. So let's take a look at gold. It's the wrong one. That is, I don't even know what that is, like a stock. Let's also take a look now at the dollar. Let's put DXY, which is the US dollar currency index, which does weigh against other currencies as well. And what do we have on the dollar? Well, this blue zone is an area of interest where I've seen price support on the dollar in the past, support when we're above it, resistance when we're below it, resistance, 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 support, resistance. A very key area here on the dollar between 98.90 and 99.30. Resistance, support, resistance, support. And because the dollar is not an asset that really people invest in directly on the DXY, it's a lot more choppy, sort of like the VIX. We want to use an area. We don't want to use a specific key level. We want to use an area over a key level. So what are we looking for? I'm looking for the dollar to reject here and continue lower to help keep us more bullish on gold. Amazing, guys. This is a nice confluence right there. There we go, dollar moving lower. We had this huge imbalance drop right there. So yeah, look at that. If we stay below this 98.94 on the dollar, that's going to help support gold. That gives us the confluence we need to look for those longs in this support area and this buy the dip opportunity on GC. Guys, I think I hear somebody in the backstage right now. I'm going to need a drum roll, please, because we have the one, the only, best CEO.
Did you hear me knocking? Did you hear me knocking?
I heard you knocking, bro.
Yeah, bro. Thank you for opening the door for me.
Bro, knock
Kevin?
on Kevin's door.
Dude, I feel like we haven't done like one of these in a while, right?
Right?
Things have been so busy. Good morning, everyone. Yeah.
Bro, you want to share your screen? I see we have a V2 on our market AI. Did we launch something big lately?
We have a 1 second.
For sure.
We are rolling out a bunch of stuff over this week. A lot of internal back-end changes that are really going to improve and nail real-time accuracy. All of this is coming out over the course of the week, a week and a half. But there's lots of coming. I can't give too much about it, but if you see certain changes, things are going to move in a different direction in the coming weeks, and I'm excited to share with you more. But I've been specifically told not to do these, so we'll be a bit. Just ignore some of the things you see right now because they'll start to make sense as we move along. But thank you all for joining us, and I miss you all too. Thank you so much. Yeah. Good morning to everyone here. And let's just jump into it, man. We have a very big week. And man, Kevin, you know what it is. It is Jackson Hole Symposium. We got big J Hole later this week.
J-Hole.
That's what he says. So it's on Friday, right? Jackson Hole Symposium, 10 a.m. We have the speech. Now, this is going to be the main catalyst for the week. And the markets are going to be positioning themselves going into this. So what I'm currently seeing is ES has been more corrective structure over the past week. But now I'm starting to see more of a bottom forming around this area that we have marked out, like just in this zone, and retest of these highs and just above. We're above the previous highs down here. So if price can remain here, or maybe even if we set up some positioning going into Jackson Hole, that makes sense for that. And Warsh takes that, and the markets perceive Warsh's efforts of less forward guidance as dovish. We can take this route towards the upside, and this could be some of the setups that we look for going into J-Hole, or just riding buys above here into these highs and positioning yourselves for that, because we still have 2 more days till Jackson Hole Symposium. Gold, on the other hand, gold could easily do the sweep like this, come down to one of these price points and set up for those buys, right? And that would be a clean. I would love to see gold at like 4,500. If we could see gold at 4,500, that sets up for fantastic buys going into Jackson Hole as well. So that's just certain things I'm looking for. I'm going to pay attention to this wick over here, but this order block, 4,500 area, sweep of this consolidation, and then going into here and then setting up for those buys, similar to the same price action that we had here, where we were consolidating. Buyers weren't able to drive price up from here. We tapped into this known liquidity area to the left, right over here, set up for those buys, and we called this out in market in the morning the previous day and on Thursday as well. So these were clean buys. You can see how instantly they played up towards the highs. So something similar on gold is not out of the ordinary, right? Tapping into this wick area to the left, right here, something like this, and you could push up, right? Exact same setup as right over here. So now it starts to make a bit more sense on what type of market we're currently in. We're in like a sideways moving balanced range. We can push below, look into this, tap into, get more liquidity from the left, and better price points where buyers will then set up, right? And this doesn't change bias or anything. It just shows you market mechanics that we tapped into 4,700, right? And what were we talking about all the way from here? That once we break out of this range, 4,700, 45, 4,600 will come right away. So again, we're mindful of where we're buying and what's happening on gold right now. When price does consolidate like this sideways, it's honestly best if you were positioned beforehand, because then you're more so like break even when it comes back down here. And even with a quick sweep, you take a minimal loss versus trying to buy up here, buy up here. It doesn't make sense, right? You want to buy at the lows of these ranges or wait for a sweep of this because it's looking awfully lot similar to this exact setup here where markets consolidated, could not push from these range lows, and then we got a liquidity push to the bottom where buyers were then aligned. But that doesn't mean that we can't just reject from here, right? Like these lows and continue up. So we just got to be a bit more mindful of gold at the current moment. Now, if you start seeing price action shifting and continuing up towards the upside, we would essentially need to break out of this range, right? Like this range that we have created right below 4650s. So if we can break above 4650s, then we can head back up to 4700. So until then, gold is just moving sideways. And when it moves sideways, it's best to just take the trade from the bottom of the range or wait for the sweep into this wick area or retest this previous highs over here and retest these previous highs right here. This was before the June NFP right here. So same sort of structural retest would be valid as well, or just a deeper pullback into these zones. So these are more of your intraday setups that we just talked about. And price reversing would from here would again just push price up to the high of these ranges. And then we would have to see and determine whether that breakout would come or not. So again, keep in mind range, right? What happens in a range? Either we push from the lows of the range or we dig deeper for that excess liquidity before buyers can then jump in. So deeper pullbacks make sense to me. It's not the best price. Buyers market should create confusion before Jackson Hole. Yeah, I would love to see a liquidation here too. Like this sort, if like going into New York session, we can get this pullback down to here. But that's why I'm trying to walk everybody through all these different scenarios that could take place because that's what you have to do. You have to analyze the markets from the different probabilities that could play out and different pathways that price could take. One of them is this exact pathway that price could take. The other pathway could literally be us just consolidating here, pushing from the lows, right? And then just making our merry way towards the upside, being more of a slow grind. Of course, this is like the probability of this is lower versus having a sweep. And then, when that sweep comes in, the push towards the upside is going to also be more aggressive, right? It's not going to be this slow ass grind that we're currently in happening right now. So it's exactly the same principle as what we saw here. Consolidation, buyers tried buying the lows of this range. They weren't able to sustain it. And then we got selling pressure coming in New York session right over here, right? Pre-New York. This is, right, going to New York. This is around COMEX open. And then we got the buying pressure right here that led right to the highs of these ranges. And that was 1,000 pip move on gold. So just keep that in mind is that once we do take out these lows, or if we take out these lows and you get your position again, just hold till these highs. Hold till the highs. That's your range to play on gold. Now, when we go to ES, again, keep in mind, this is the type of analysis we're looking for on ES, where any sort of liquidation push to the bottom of these range or even lower, get some extra buying liquidity in the market and then push up. This would be positioning for a dovish Jackson Hole symposium before before the event actually happens. So yeah, that's my analysis. Kevin, what do you have in mind, man? What are you looking at?
Bro, I love where gold's at right now. I'd love to see it try to hold. I was looking at pre-market wise on gold right in this area we're at right now. We've held this area Sunday overnight. Monday we held this zone. Overnight we created a few higher lows forming very close together. We're finding some buying pressure right here. I don't know if I want to take it right off the bat, but if we do start showing some more buying support, we had volume increase into this zone too, which is a good sign.
Yeah.
Would like to see us try to trade back out of this zone to look for a trade setup on some longs on gold. Still want to keep trading the trend. Trend is our friend. Trend still does have gold as bullish. But like you guys mentioned, right, we have Jackson Hole coming up. A lot of times markets will, let's say they're expecting a big reaction. They're going to sell off in anticipation to it for better positioning.
Yeah, yeah, absolutely agree. Absolutely agree. And that's one of the things is that the more you look for that sort of positioning beforehand going into some of these events and you're more cautious about it, the more apparent it becomes, right? Like this sort of positioning. Now let's think about what's actually happening behind the scenes here, right? Buyers are buying from the lows, sellers are selling at the highs here in this range, and then retail, everybody's getting messed up in the middle and caught up in a
Yep.
bunch of confusion. They're like, oh, are we buying? Are we selling? And people are getting chopped up here. And when it's chopped, it's just like the worst. It's crowded. Like I don't want to be in that crowd. I want to wait for some sort of move to happen that shows me and gives me that conviction in the direction. Now, buyers are buying here, sellers are selling here, retail getting chopped up in the middle, whole lot of confusion happening. Now, when that move towards the downside starts happening, just like this liquidity play that we were talking about over here, you get retail panicking. Retail starts closing their buys for losses, starts selling, hoping to make that profit back. And then what ends up happening is that institutions position themselves, algorithms get in, and you get a clean rejection of 4450s. And you're like, oh shit, man, that was such a clean move. And if I had just waited for that, I would have avoided the over trading, revenge trading, taking a position in the opposite direction, and just aligning myself with the trend because it's my friend, as Kevin said. Now, it's the same thing here, is that once we get this sell, if we get a break here, retail is going to start tripping out. You're going to see a quick squeeze towards a downside where then markets start lining up for those buys. And if we get those buys lined up, then it's just easy for us to really pinpoint it. See, this is what I'm talking about. Exactly what I'm talking about is that if we get these now buys lining up, going down towards the downside, you're going to get that clean volume and volatility that align with the overarching trend. So this is where we go into the lower time frames and we anticipate where that bottom is going to happen. And then now we can see we have a clean zone here that targets its previous structure to the left here, right? But we can also go a bit deeper, which is fine. We're just going to observe and see where that bottom takes place. And maybe one of my favorite setups is also, let's say you have this range, right? And I'll show you an example of this. If we start closing back into this range and you get this sort of structures printing, that's also a good buying opportunity. But again, these are the two setups that we're watching out for. Confirmations, if we started closing back above 20s or push down into this zone here, this wick to the left, to see if buyers want to take that price.
Awesome. Question in the comments. I don't even know where to begin to pronounce the name, but can you please explain what is going on in the geopolitics?
Yeah.
Really much like updated wise going on. It's really just sort of a
look at the price of, come on, I drew these, I drew these arrows on July 22nd.
Bro,
the price of oil is following them exactly. And the point is that the entire focus on the war leads down to the price of oil. If the price of oil is going down, gold, NQ, ES, crypto will go up. Why? Because lower oil means lower inflation. And that's what the markets price in. If lower inflation means no need to hike rates. And if no need to hike rates, eventually Fed will cut rates. So that's what the markets price in with oil and geopolitical tensions. If geopolitical tensions are holding weight, you're going to see oil spiking above 96, 94s. That's the only time it will hold weight, is if you see these highs getting taken out, and that's when you're like, okay, we're a bit risk off because the war is putting emphasis, and we're seeing that translate into oil prices spiking. Now, just to put the focus back on gold, because we'll go get back to geopolitical tensions, but geopolitical tensions aren't in focus right now. So what's in focus right now is gold and how we're setting up over here. So geopolitical tensions aren't in focus as long as oil stays below here. Yes, we get these headlines, But we can clearly see that de-escalation attempts are taking place, and clearly we're bearish on oil right now because there's no need for oil to be at $100 a barrel if the war is priced in, right? And here's that gold squeeze happening. Oh man, I'm also getting called into another call at the
decline.
Bro, yeah, I'm gonna have to unfortunately take this. I'll try to be back in like 15 minutes though, Kevin.
All right.
Yeah. Guys, but keep in mind, this is what we're waiting for here, okay? We're waiting for this sort of double bottom to form and see where buyers take the bite, right? We want to see where they take the bite, and then we want to take that buy and ride the trend. Kevin, I'll be right back. Very unfortunate. The founders got to do some founder stuff. All right, guys, I'll be right back.
Do some foundering. Later, bro. Why are indices cooked today? What's up, Ryder? Good morning. We take a look at indices, see where we're chilling at. Right now, I do actually have ES and NQ and the VIX on my chart. New York session opens in about 3 minutes. If we look at the daily time frame right off the bat, right, we know we've been a bit more bearish on something like the NASDAQ. Now, that bearish significance mainly comes from a driver of NVIDIA. Now, NVIDIA had, I believe, and I'm going to pull up the NVIDIA chart for you guys. NVIDIA has had 1, 2, 3, 4, 5, 6, 7 red days in a row for the first time in a long time. As we see, their longest streak recently was 5 days, 5 days, 4, 7 days right here. Since last October 2025 was the last time NVIDIA had that big of a bear move. It ended up pulling back and ended up continuing lower. So we're getting that same type of pressure, creating those lower highs, lower lows, lower high. So I would look to see, does NVIDIA pull back, remain below 228, and then continue on lower again, right? And that would also help with the ES and NQ moving lower, mainly the NASDAQ. So just something to keep in mind when it does come to our equities. We want to keep an eye on that overall trend on equities when we are looking at things like the ES and NQ. Right now, what I was looking for on ES and NQ was a sweep. So here's the NASDAQ. I wanted to see us sweep into this area up here around 29,480 in the New York session open. We had a low volume on Thursday, low volume up here Monday. And at the moment, we don't have any volume up here because price hasn't traded up there yet. So I'd like to see a break of that previous day high, which is this white level right here. Break previous day high, trap a lot of buyers, and reverse on that. If we don't get that trade set up, then the next thing I would look for is to see, okay, well, look at this. Pre-market, we've been holding this zone a few times now. It's going to load in one moment right over here. Support, support, support. But at this point, so look, when we held it first, it gave us a 120-point move. Then we held it again. It gave us a, let's see, we measure it out with our measurement tool. Gave us a smaller move, 80-point move. Then we're trying to hold it again over here, and it's barely holding. 30-point move pulled back, 20-point move pulled back. Looks like we're trying to squeeze lower here. So ideally, what we could possibly look for on our equities is a break and retest of this range to then target some lower levels on the NASDAQ. This is ideally what I would like to look for today on NQ. Gold definitely in a category of its own. I wouldn't be so quick to short gold with the momentum we've been seeing, but that doesn't mean if you see a trade setup to not take it. If you see something that complements or makes sense to you, that is in your trade rule book or trade playbook, then take it. These streams are here to help give you guys extra commentary on the market, extra insights that you might have missed on your own. And take advantage of everything that is given to you and everything that is at your hands. So here we have 4 seconds before New York session opens. We can see if we are breaking, we're closing lower. So we'll see if we get a quick spike up into resistance and pull back on NASDAQ here, or if we just spike up and continue. So there's that spike up and retest of that zone. See how volume wants to react. On gold, on the other hand, take a look at gold. Gold, I wanted to see us sweep these lows, which we just did, and break back higher above. So if we could get back above 46.80, I'd be looking for some longs on gold. Here goes NASDAQ trying its best to reject this area right here. Bit of a low volumes shelf as well. I'm not jumping in right off the New York session open. You could try light size if you wanted to. I'm really just going to be a bit more patient at this point. What's up, Tazzy? Tazzy, you're not late for the party. You're just on time. Nas showing a little bit of strength here. Like I mentioned before, though, I do want to keep an eye on equities. NVIDIA gapped up but is selling off of the open. NASDAQ, look at that, struggling off that point, popping, struggling, popping, staying patient. I'm not in this trade, guys. I will let you know if I take a trade. ES at a support level right here, this key level, held as resistance, support, and it's trying to hold as support again. NASDAQ came very close to these recent highs. My A+ setup for my pre-market analysis was a supply sell from 29,488, which would call for us to move back above over here. Really just a matter, in my opinion, of staying patient off the New York Open. And we do have to, again, recognize Jackson Hole is going to be this Friday, so we might see range-bound price action until then, or markets positioning themselves for that more bullish read on Jackson Hole. So here goes NASDAQ trying to hold again. 5 minutes still has 3 minutes left. Markets have only been open for 2 minutes. Why would you feel the need to rush into a trade or force a trade? Markets have only been open for that long. Next key level we have on NASDAQ is 29,375. After that, we have 29,486. Thinking of MGC, let's take a look at gold. Are you down with MGC? Yeah, you know me. There we go. Gold with a nice pump after sweeping those lows so far. Very quick and steady pop up. Be patient here. We want to see us get back above these levels and hold. Once we can do that, we will look for the follow through. If we don't get an entry on longs down over here on the breakout, what we can look for is this 15-minute supply area that formed to be our break and retest zone to go long on gold too. So that would call for us to break and make a higher high off of this lower high and then pull back, create a higher low off of this zone and continue trend. So instead of trying to force a trade over here where there is still an opportunity that we want to sell off, we are being patient for trend to actually confirm we're trying to shift back on the buy side. Now we are still overall bullish. As long as we do remain above this previous day low level, 46.51, we should be able to hold. I do think we just got a headline there. Let's see what that was. I thought we did. No, nothing major right now. I think gold may sweep previous day low before continuation. We'll see. We'll see. I would not want to see that previous day low get swept. One of the main reasons is because we barely have been sweeping previous day low lately. But does that mean it's impossible? Absolutely not. Nothing is impossible when it comes to the market. We want to talk about possibilities and probabilities. So let's see. We heard a headline come out. What was it? Trump says he was unhappy with U.S. agreement for joint military exercises with South Korea, citing relationship with Kim Jong-un. Okay. Yeah, Trey, I was going to say, Piyush, you took the words right out of my mouth. Trump yapping. Hourly time frame is also something we could wait on. We have 25 minutes left. Do we really think that the hourly is going to create this lower wick all the way down here and then pump all the way up here in a matter of 25 minutes? No. If anything, we break out, we close outside of this zone. That gives us confirmation for the longs, and we take it back to the upside. So at this point, if we want to be a buyer on gold, we're being patient. We're not just buying a random dip, we're being patient. We know that this liquidity sweep can happen. We know that we can head towards previous day low. If you are able to make, I tell you guys all the time about the and theory, the and factor, where we say, here's a liquidity sweep level and a demand zone on a higher time frame, and gold's fundamentals are bullish, right? We just named 3 ands. But if you start saying things like, well, we just swept a low in demand, okay, that's an and. But I know Jackson Hole is coming up soon, so I know institutions might be positioning. But previous day low is very close to price 2 right now as well. But we're creating some lower lows, and we did create some lower highs. So now you're saying and but. So right now, we're staying patient. We're sitting on our hands until we get some more proper confirmation. Kevin, what's wrong with your guy? He's thinking to change the... Bro, I saw that this morning, man. I actually tweeted against that, and I was like, doesn't this guy feel a little silly saying things like this? First, it was the Gulf of America, right from the Gulf of Mexico. Now he wants to change Lake Ontario to the Lake of America. Like, bro, don't you just feel like a little ridiculous? Like, this is child's play. This is childish at this point. But we don't want to get political here. We just want to speak facts. So that's what we'll do. See that? Look at that. Imagine you grabbed random gold longs here thinking, oh, we're pumping. I knew it. I got to take longs here. Random stop loss at that recent pivot. Guess what? We could just dump right through that area again. We could sweep that low and then reverse. Wait for proper confirmation, a proper trade setup, then you take it. Your stop loss should be where your analysis is incorrect. Your stop loss should not be a random area. Yeah, let's trade and make money. Yeah, exactly. LM gets it. Absolutely. See that? Imagine you took those random longs, but your stop at that recent pivot, you would have been stopped out. You would have been chasing. You would have been like, oh my God, I knew I shouldn't have done that. Now I got to go short over here. Let's see. Imagine you now grab a short position over here. Now, again, with the good part and bad part about taking random trades when you get stopped out is this. If this trade does play out, it's good that you took a winning trade, but it's bad that's creating bad habits. You do not want to create bad habits in your trading because then you're not going to be able to tell the difference between your good and bad habits. So good habits only. Awesome, guys. Sweets. Oops. All right, so that's NASDAQ also started pumping near key level, reacting to this 29,375 at the moment. Really just a matter of being patient. You know, a lot of this is leading towards Jackson Hole. What we could do is we could come over to Ask Market. And we could ask Market, how can we prepare for the Jackson Hole event? Ready? How can we prepare for the Jackson Hole event? And by the way, if you took that random short trade on gold, you would have been wicked out again. So again, don't create bad habits. Don't chase these markets. Trade your setup always. The big J hole with the big K hole. You guys got it. And we'll be live here at Market in the morning with your big K hole. Awesome, guys. Let's see. Jackson Hole is Friday, August 28th at 10 a.m. Eastern. Warsher's debut speech at the symposium amid bond market turmoil. Markets are pricing in a 66, where'd that go? A 66% hold for September's FOMC, but his speech could shift rate expectations sharply. K-holes for Elon Musk, that's crazy, bro. Hawkish Warsh. So if we have a hawkish Warsh, bond market tightening concerns win. Dollar pushes towards 99.6 resistance. Gold tests 45.50. The Treasury stress plus Fed independency rhetoric keeps real yields elevated. Short any dollar bounces into resistance. Big picture neutral. So no near-term policy signals, which will probably, unfortunately, be what we get from Warsh because he loves giving us a whole lot of nothing. At least that's what we've seen so far in his last couple FOMC meetings. Dollar will stay range bound. Gold will consolidate. Volatility fades post-speech. So as soon as he's done talking and while he's talking, markets are going to end up going more sideways. Look for re-entry of existing trends, bearish dollar, bullish gold, right? Because we're looking for the trend to continue because there was no change. Dovish lean. Dollar breaks below 98.50. Gold rallies towards 4,700. Should say 4,800. I do believe gold is already above 4,700. No, it's at 4,674 right now. We were above 4,700 even just earlier today in the pre-market. Look at that. We're trying our best to hold these lows. I would definitely be considering some longs on a buy the dip opportunity on gold, but I'm really more of a fan of staying patient at this point. It is giving me what I was looking for, which was a sweep of these lows and a reversal. But 13 seconds left here. I don't want to be jumping the gun because we know that that's enough time. Even if it was a minute left on this 5 minute, that's plenty of time for markets to continue to dump again or to continue to wick higher. We don't want to be flipping a coin and taking a trade. We want to trade with our actual edge. Closed back above this level again. So that's two closes back above this sweep level of 46.70. But again, that's not convincing enough to me to be like, okay, great, now I'm taking it. Because if we look at the 15-minute time frame too, we have been trying to reject lower. So I don't want to be the trader that's forcing trades. NASDAQ range bound as well. Let's take a look at what the dollar's doing. Give us some insight in there. And guys, if you haven't already, man, smash that like button. Show some love always and forever. Dollar is at a point where it's trying to reject back lower, which would help gold move back higher. So again, I would not be so quick to try to short gold in these conditions, but I also wouldn't be so quick to just grab random longs. Be aware might be going to retest weekly open 45.98 before pulling back into buy setups, personally in my opinion. Good call, Scott. Listen, man, that's why we always say too, right? If I'm going over something and you disagree or you have your own analysis that says something else, then don't go with what I say. Go with what you say. Go with what your experience is telling you. I might see something different. We could all see something differently and still all be profitable because we have the proper risk management, because we take our A plus setups only. Like, I'm not taking longs here because look at that. Longs would have been stopped out left and right so far. Shorts, bit of the same situation. So be patient. Let it play out. What's up, Seb? I'd be cautious on gold. The daily looks a little ugly. Looks like sellers want to see yesterday's low. Yeah, exactly. That's what I think somebody else mentioned that as well. Price target of the previous day low too. So we'll see. I don't know, man. If a bunch of you are saying previous day low, then maybe we're not going to hit previous day low. Markets are watching. Dollar trying to reject on lower. That's a nice sign. But don't forget, too, yesterday during the New York session, we kept trying to hold support, and then we kept failing. We called out these gold longs down here. A lot of you, I know somebody profited like 160 ticks on that. Then it just chopped around. It came back, gave another long position, chopped around, came back, long position, came back, long position, came back. So who's to say that price action isn't similar to yesterday, where it looks like a long position and then we come back. Then it looks like a short position and then we come back. Patience is a virtue if you're going to wait for a good setup. If you do not see your setup, you do not take a trade. If you do like gold shorts, then please, by all means, go for it. Just understand what your risk is on that trade and understand that you might take a loss. Every trade, before you take it, know that it could be a loss. I'd want to see if gold can break this low. I'd want to see it head towards 46.39. 46.39. Let's put our NQ back up on the chart on the right-hand side over here so we can keep an eye on that. Yo, that's a nice rejection to this key level. This level right here is a call wall level. Just a little heads up on that. It was a 30-minute, what was that? A 30-minute supply zone that did break overnight, but it is working very well as we see as a key level. So if NASDAQ starts breaking lower here, could possibly be setting up to see those demands and those support zones to the downside. Very clean. We'll see. Be patient. This is not a market condition or market environment where we're confident about forcing a trade, where we're confident about taking a trade that might go against us. These are range-bound conditions. Be patient. We've only tapped into that area once so far, which was Monday Asia session, retesting previous week high. Cool? Cool. Check our market terminal, see if we have any headlines come out recently. Nope. Nothing major. Guys, I think this guy's slamming. This guy's smashing at the door again. We gotta
Oh man, sorry about that, man. Had to respond to some duties, but yeah. So we're seeing gold still developing here,
Yep.
and again, we're still looking for the two same scenarios. Either we snap back into this range that we have, and then we see that slow chug away of those buys back to these highs. Or I'd love to see us push deeper into this zone over here that we have to the left. Maybe take out some of these lows and induce those, like trap those sellers in, get some premium buy price right here, and then we can position ourselves for Jackson Hole Symposium and the supposedly dovish tone that the markets are going to perceive.
Supposedly.
Yeah, supposedly dovish tone that the markets are going to take it as. Because that's all that really matters. It doesn't matter what Warsh says to, like Warsh was going to say things, but markets are going to take it more as a dovish leaning tilt. And I think it's going to be a repeat of what happened at Jackson Hole last year, but Powell was more explicit in that terms of labor market risks from last year. So we can actually even go over that in backtest fundamentals just to show everybody what that tilt actually looks like and what you should expect or actually, yeah, we'll start from actually February. So exactly as where gold currently is, we can see gold has been rallying because of markets pricing in that eventually rates will be cut, that there's no more hikes on the table and pricing out those hikes as oil continues to drop below 90s and remain below hundreds as well. So we know that geopolitical tensions aren't putting too much of an emphasis on the fact that the war is still ongoing. Headlines are coming in, but you can clearly see that peace deals are still getting brokered. So with
Yep.
Pakistan saying that they're helping finish the war, and we recently had headlines today. But the entire point being is that we're at a point where the markets have already started front running that. Okay, so we're already bullish, and the only recent slowdown we've seen is just we've just seen U.S. equities consolidate and do an intraday pullback, which is completely fine, given that we have a big event and that liquidity transferred into. You can see BTC right now, and BTC is just absolutely having a week, an
Yeah.
amazing time bouncing off these lows. Okay, so again, that same sentiment is prevailing across the board, and the markets are just waiting to see what Warsh comes out and what he says. But we can still think about ways to position ourselves. And one of those ways is either we snap back above this range if sellers can't drive price down further, or I would love, and this is that A plus setup, right? Like, or your A setup, and then this is your B setup. But yeah, the deeper we go, the better, because cheaper price, right? I'd rather buy gold at 45.50 than 4,700, right? It's just a cheaper price, more attractive. So this sort of intraday pullback is not out of the ordinary, and that's why you also have on market showing you that there's a reversal risk here, right? That we could push down to either of these levels and still be bullish, because that's what the current diplomatic easing that's happening to the tensions, the buyback from the US Treasury, all of this is putting bullish pressure on gold and keeping gold more bullish. So any of these intraday pullbacks eventually get faded out. So whenever you hear somebody talking about, oh, this move's getting faded out, it's because it's continuing with the trend. Like, look at this. We pushed down from this consolidation. As soon as we found support at the previous known liquidity area, right over here, we got buyers jump in. And it's the exact same thing that we're waiting for over here, is how do we react to these lows? How do we react the deeper we push into here? Having any thoughts?
It's really, this is going to be one of those days where you're better off sitting on your hands than trying to predict every other move. It's
Yeah.
might even be
Yeah.
one of those weeks.
Mhm.
I just dropped a poll, guys, if you want to vote on it. Are you bullish or bearish on gold today? Type 1 if you're bullish, 2 if you're bearish, and 3 if you're expecting a range. Now, I'm going to drop a 3. I'm thinking we're range bound. Nil, what are your thoughts?
Well, I just gave my thoughts here on what I'm expecting for gold. So this is
So a bit of a
literally what I'm waiting
pullback
for.
bullish.
Exactly how I confirmed. Like, I don't look for every single minute candle that goes. I look to
Yep.
position myself in the markets. I walked the like this example through exact same scenario. I'm just waiting for. I don't care if it's 2 days before Jackson Hole or if it's Jackson Hole. If it presents itself, I'm gonna swing the bat and take the risk on it, right? So
Awesome.
I think that's what we just gotta do. We don't gotta care about, oh, what's happening right now. It's like, okay, is it at our price point that we want to execute at? And, oh, it's not. Okay, cool. Let's go look at something else. Oh, okay, this scenario is playing out. Okay, maybe this isn't where I want to take advantage of. Yes, cool. I'll move on. We also just had open, so we'll see how it plays out. We know that we need to take out these highs here in order to push up. But yeah, other than that, that's what my main idea is on gold. And honestly, I'd love to see it even lower. The lower the gold goes, the better. To be honest, like
Yep.
that's not the trend line I wanted. The lower the gold goes, like gold could even come to that exactly we are talking about 4520s, 4500, and still be largely bullish, right? It could even come down to 4300. If imagine if Warsh's speech got taken as hawkish, you'd see gold down to here, and that would be. But then the markets would eventually fade it, right? So we just gotta keep that in mind, be mindful of where we are right now and how we can correct to deeper price points as well.
Awesome. Awesome. We got a question in the chat for you. If price comes to your zone, do you just buy or do you wait for some sort of confirmation?
Yeah, you could break up that position and just buy if it's at your zone, or wait for confirmation. It depends on how you trade as someone, or what type of conviction you have in the actual play. Like this one, I waited for the double bottom just because I wanted to make sure it's at this liquidity zone. But sometimes if the conviction is like strong enough, like here, like this was a pretty easy buy on an Asian session, right? This was just like an easy, like price came here, I just ended up buying. I'm like, cool, 200 pip stop loss, fuck it, like down here, and then take profit towards upside. And this was like the treasury buyback announcement, right? So which just added as the catalyst. We were already headed towards the upside. There was just a catalyst that drove us there. So yeah, 4,500. Hopefully that plays out, right? But you could get some sort of bounce from these highs, retesting this. But just be careful, because I'm also looking to see it, like if we can dig deeper into this order block, maybe take out some of this lows to the left here. But we'll see. We'll see. You know, you can only wait and observe to see where price is heading. Like,
Seb dropping some gems. That's a key thing. Even if Warsh is hawkish, it will not change the fact that inflation is not spiking and labor market data is a wild card. Markets will fade the hawkishness eventually.
Yeah, absolutely. All right, Kev, I gotta hop off, but good call, good analysis. Hopefully we get some sort of proper positioning going into Jackson Hole. Keep in mind, still in a few days. No need to rush things. Kevin said it best. Today might be a day to just sit out. You don't need to just get rush every single move. Like, imagine this: if you were in this buy, okay, let's say you waited for this and you took this buy above here because you're like, oh, price is snapping back above. Valid. Okay, maybe that's valid for you, and it's maybe valid for me too, that I'm taking this, and then you get stopped out. Is that because your execution was wrong, or is that just because it's just the wrong probabilities that played out? Most likely, it's the market's doing what the markets do. It's the probabilities didn't play out in your favor, but doesn't mean that your conviction was wrong or that your analysis was wrong. It's just that the opposite end played out, and that's always how you need to think about how you position yourself in the market. Is that there's probabilities that can go against you, and largely there's always probabilities that will go against any type of move we make in life or in the markets, right? So now, maybe the better thing to do is just wait for the next key area to see where price is, or maybe even wait till daily close and then see if Asian session or the new daily candle could give us more volume and better price setups. Because you don't want to rush into something right after taking a loss. Cool off, come back 10 minutes, 15 minutes, 30, 40, 50 minutes later, and then look for that. And I'm telling you, man, every time that always works out best. Like, you'll always avoid making that mistake second time, third time. So then this is what I'm waiting for. I'm going to watch, and even though I want gold at 4,500. If this gives a quick bounce, like if we get a retest into 45.75, we get a quick bounce, that could head up into 4,600, 46.20s, right? That's a lot of pips to catch. So, all right, team, I'll see you Thursday. Kevin, we're doing the Jackson Hole?
Bro, of course we're doing the Jackson Hole.
What an idiot question I just asked. Shit, man.
Nah, we'll take off that day. You guys are on your own.
All right, guys, we'll be doing the Jackson Hole stream. So thanks, Kevin. I'll catch you later, man.
Absolutely, brother. Thank you for being here. And I'll see you coming back on Thursday.
Yes, sir.
Let's get it.
See you Thursday.
See you, bro. Awesome, guys. Great. Always great having Nil on these shows. Yes, sir. Gotta do the J-hole. Bro, J-hole is such a funny term for that, man. I can't even. But guys, don't forget, man, when we say we're sitting out, don't think like, oh, I'm not taking any trades today. I'm not making any money. Think of it perspective-wise. If you're not putting risk on the table, you're not losing money. There's a saying, and it's cash is a position. Let cash be your position today to keep you protected from uncertain volatility. There is uncertain momentum. There's uncertain follow through right now in these markets where it looks like buyers hold and then sellers push through. Then it looks like sellers are bringing us lower and then buyers push through. That's what's happening on gold right now. That's what's happening on NASDAQ so far today. Why would we want to be the trader that thinks that we have to be right every single day? If your read on the market is we're within a range and a confined range, we don't take a trade. You want to give yourself preparation. You want to give yourself opportunities. You want to give yourself, when I talk about preparation, I'm not saying, oh, buy low, sell high. That's just the broad of how you should trade. But when you do preparation, we're talking about, okay, let me give myself 5-10 minutes before the New York session opens or before the session that I trade begins to mark out levels that I'm looking for. The money, I just read the comment that said, I'll keep my money. The the setup that I'm looking for on NASDAQ today was a short off of a sweep of previous day high, or longs back here in this 4-hour support zone, which lines up with the open price, which lines up with the gamma level, which lines up with the bullish fundamentals on market. There's my and theory. We just named 4 reasons why we would want to go long here. Then I also know we'd want to go short here because of a few reasons too. 2-hour resistance, previous day high swept, and I know the fundamentals are bullish ranging, and I know the technicals lately on NASDAQ has been, look at that, more overall bearish. So that's why for me, right now, this is a no trade zone. I don't want to think, oh, well, this zone right here held support a few times. I think it might hold again. Let me just try a random long. Guess what happens to random trades? You get stopped out, you get frustrated, you chase the other direction, then you get stopped out of the other direction too, and you start going, oh, I knew I was right the first time. I should have just gotten another long. And guess what happens? If you take that random long, you get stopped out, and then you try another long position, guess what'll happen? It'll stop you out back to the other side and say, I should have flipped my bias and listened to my stop loss. Don't put yourself in that position. That can be avoided. Avoid that situation. Avoid that positioning. Be a patient trader. That will protect you in the long run. We want to remember that trading is not, you're not just a trader when you're trading. You're a risk manager. You're the person that tells your trading company, because trading is your business, that yes, now is a good time to buy, or no, now is not a good time to buy. Yes, now is a time to sell. No, now is not a time to trade at all. When we're able to figure that out, we're able to be a lot more disciplined as traders. We're able to be a lot more patient as traders. And when we do that too, it has a positive domino effect to say, great, I stayed out of all of this chop right here, and then when price finally hit the area I was looking to go short and I took it, it played out so well that sure, I had to be patient for an hour or two, but guess what? You could set an alert, a set and forget situation, go do something else, go walk the dog, go get a haircut. I know you guys complimented my haircut. Oh no, you didn't. That's messed up, guys. But we want to be patient. We want to be patient traders, and we want to enforce good habits. Good habits surpass bad habits. Anything you're doing in life, not just trading. So yeah, exactly. Keep your money. Don't give your money to the markets. If institutions know when to stay risk off, why should we not know when to stay risk off or risk on? See that? Imagine you took those random longs, stopped out. Yo, I got to go short now. It might move a little bit, but then we might wick right back higher again. We don't know where we're going until we get there. And when we get there, that's when we should have some type of trade setup in line for us to take with confidence. Awesome, guys. Beautiful, beautiful. If you haven't already, man, smash that like button. The lab said you have to hit 100 likes on the stream or we're not doing Jackson Hole. That was his words, not mine. I swear he said that. Awesome, guys. Beautiful. Volume profile, right? We like to use volume profile for confirmation too. We have heavy volume in this whole area. Then we know this is a range-bound price action area. Leave it alone. Let's take a look at the ES. Let's take a look at gold. Look at this. Gold. Imagine shorting the lows, thinking, oh, gold's moving lower. We got to hit that previous day low. I need to jump in a short right now. Stopped out. Oh, wow, longs are holding. This zone's starting to hold. I got to go long right here. Guess what? You could have done that 2 times today already. Tried a long over here on this 5-minute close. Been stopped out immediately. Could have tried a long again over here on this bullish 5-minute close. Stopped out immediately. Then you could have tried shorts. Right? Let's say you tried a short on the breakdown over here. Said, oh, okay, I'm going to go short on the breakdown. Put my stop at that recent high. What happened? You got stopped out immediately. These are no trade zones, and we do not want to be the trader that says, oh, no, I'm right, I know this, blah, 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 with zero confirmation or confluence. Right now, gold is range-bound. NASDAQ is range-bound. ES is range-bound. Kevin, why session volume profile versus anchored volume profile? Better for streams or personal preference, like they look or something like that? So session volume profile, anchored volume profile are very similar. They're really the same thing as long as you anchor your volume profile on the same starting point, which would be right over here at the 6 p.m. Eastern. It's more so that it's easier that I don't have to change it each day. Like you guys saw, I was using the anchored volume profile, and that is this tool over here. right over here, anchored volume profile. I could put it up right over here at 6 p.m. and it gives you its profile on the right side, right? And that's fine. We could also set it up to put on the left side. That's also fine. Gives you the same information. Only difference is too where it's actually placing it on the right or left. When you do place it on the left with the anchored, it stays on your chart the whole time. Same with when you have it on the right hand side, stays on your chart the whole time. Let's see, right? Whereas when you use the session volume profile, and it's the same profile, you're going to see it's the same, it's identical, right? It's identical. Lower volume over here, lower volume over here, heavy volume over here, point of control right here. So it is the same exact volume profile as long as you're starting it in the same place. It's just a lot easier, and it also gives me those previous days volume profiles as well. And take a look, this is yesterday's point of control right here, this orange level. We failed that. That was a key level. That's a key level lining up with today's point of control. So that also tells me this is range. This is all range right here. We're in between yesterday's value area high and low. We're ranging. We're breaking lower but failing to continue lower. We're ranging. Yeah, it's pretty cool, man. If you want to use it, go to indicators, search SVP or session volume profile. You could spell it out, and it will come up under technicals. It is not any that are created by anybody. It's actually one that is built by TradingView. So pretty cool there. Pretty cool there. Let's see, do these buyers, do we finally break out, retest, and continue? Or do we stay range bound? If I'm waiting for something to happen, I'm not jumping in ahead of it happening because it might not happen. That's why trades are so important, that you're not forcing something before it's even there. Headline, corrected U.S. August consumer confidence. Oh, did we have consumer confidence? We did. We just had consumer confidence. And as you guys see, it gave such an impact. It was lower than forecast, but it was still within the range. So what happened? We got absolutely nothing from that. Key input central banks softer, so that's more bearish on the dollar. Before we even check gold, we know if it's bearish for the dollar, it's bullish for gold. Take a look at gold, lower than expected, bullish for gold. So if, again, we can start trading back outside of this range, we now have consumer confidence supporting this trend too. We have our and theory stepping in. Things are starting to stack and confluence in our favor. Awesome, guys. Sweet. It is 10 o'clock already. Great stream so far, man. We are quadrupling the streams today, man. I have my Trading Pioneers community that I do. I have an elite group in that community where we do pre-market prep from 7:30 to 8. Then I jumped on the Chart Fanatics with you guys as well for market. That was from 8 to 9. Then we jumped on here, 9 to 10:30. Then I'm right back with the community with the homies, 10:30 to 11:30. What's the difference between session volume profile and anchored volume profile? Mr. Paul Derek, were you not just here about 5 minutes ago when I answered that? So session volume profile is going to give you the entire session, and you could actually set it to be a specific or a custom as well. Anchored volume profile is going to start from wherever you anchored it from. So if I put my anchored volume profile here on the New York session, put it on, let's say 9:30, it's only going to give me the volume from what was traded since 9:30. If I put my anchored volume profile at 6 p.m. Eastern, just like my session volume profile, it's going to give me the same exact volume profile. So no difference other than the fact that anchored, you could place it wherever you'd like. Session is usually that entire session, unless, of course, like I mentioned, you go into settings and you set it to each. Let's see what each looks like when we set that up. That might not change anything. I've noticed, it's funny, I've played around with this before. It's like, there we go. Give me something a little different here. Gee, that's helpful. That's real helpful. Market only. There we go. Again, that's still giving me the regular session, and then all is where I usually like to have it set to. Cool, guys. Sweet. Any other questions? Let me know. Gold trying to hold. Does that mean I'm going to grab a random long? Absolutely not. And something you should note, guys, a little bit of some free trading sauce, people call it online nowadays. I feel like an unk when I use phrases like that. Look at a 15-minute time frame. If you're so close and you're so zoomed in on a 1 minute, a 5 minute, you're going to miss the bigger picture. Look at the 15. Look at the 30. Look at the hourly. What's the higher time frame doing? Sorry, I'm always at work during the streams currently. I got you, bro. Listen, don't multitask too much. You don't want to multitask when you're trading because it might lead to improper execution. So, if you can, what I would recommend, guys, and a lot of people here do work before trading or even during trading. If you can, before you go to work, even if it's 4 hours before your trading session, give yourself the opportunity to do your pre-trading analysis. Start on the daily time frame, mark out your previous day high and low in the open price, look back to the left and see, do we have a trend? Where are we ranging? Trade with the trend. Look at your 4 hours, see if there's any support or resistance nearby. I see another 4-hour demand zone right here. We're going to mark that out. Oh, but look at that. We have a daily demand zone there that my Kev indicator showed me. So we're just going to leave that one. 2 hour, if there's anything over there. But taking your time to go over analysis without feeling the need and the rush that you should be in a trade will help you see the market a lot more clearly than a biased perspective. Working at the moment, got 2 screens for work, 2 others for trading and stream. Yo, there you go, Uncle Banks. I see you, bro. So we do what we gotta do. That's funny, man. That reminds me. I saw a tweet or something like that where it was a picture. This guy had like the 4 monitor layout like I have here, where it's 1, 2, 3, 4, and then he had like 2 other laptops, and he was like, I have 5 work from home jobs, all paying full time, and the guy was like making 700,000 a year because he had all of these jobs. Like, you can't technically do that, I suppose. Like, one job doesn't know about the other, but you really want to add that much stress to you? That'd be crazy. Yeah, right? Wild, man. Wild. Talk about keeping yourself busy. I doubt that person trades. Awesome, guys. Awesome, man. Look at this, man. Look at NASDAQ here. It's why we're not buying high. We're not selling low right now either just yet. Letting it play out. Let's see. It looks like there's a pink level here. I just want to see what that... Oh, that's our flip zone. Okay. Or is it a put wall? Oh, it's a call wall and put wall level right here. So we're at a support zone on NASDAQ. Wouldn't be surprised that we get a reaction. I wanted to see longs near 29,140, so I'll let markets chop around right now. So we chop, 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 slowly chop on our drop, and then find some support, sweep a recent high, look for the higher low to form, take it long, and boom, just like that. Until then, I'm patient. Guys, run the like button up, man. We got to at least hit 50. That's our minimum threshold to continue market in the morning every day. It's 50 to 60 likes, and obviously more is always welcome. NASDAQ is also at the bottom of its low volume area right now, so we know we're range bound. I don't want to sell the lows. I don't want to buy these lows either because I know markets could do whatever they want, and this is not a level I was looking to buy for my pre-market plan. Respect your plan, and you're going to go a long way. And even if that means you don't take a trade, even if that means you miss this big bear move, is the Kev indicator pasted on Discord because it doesn't show up on TV app nor on the browser? I know. I don't know why it doesn't show up on the browser or on TradingView. It should be posted in the Discord. I'll see if I can find where my Discord is. Let's see. Yo, Ryan, if you're here, homie, if you have that link to the indicator, I know you had it last time, let me know. I'll repost it again in here. I am working on a V2. Well, I'm not working on it yet, but I will. But it's a supply and demand indicator. Nothing that we can't map out ourselves. It just does it manually for us. Green for demand, red for supply. Then when we break a zone, it turns gray. There you go. Copy paste. Send it in I was gonna say send it in our Discord community because I don't think you guys are able to paste links here on YouTube. You have to access it through the link. Is it only through the link? I could have sworn. Let's see, indicators, my scripts, Kev indicator. I thought I made it public. All right, whatever. I'll look more into it again at some point. Discord. Hey, good looks, Ryan. Guys, W in the chat for Ryan, man. He's a day one homie. Him and Doc, Mr. Emergy Chan over here. These guys are classics. These guys are homies for a couple of years now. We've been watching the streams, been learning to trade. Great guys, great people. That's what we got to surround ourselves with, is good energy, good information, and things that we understand. We don't want to be going into a community or learning from somebody that's speaking practically another language in trading. Like, I know myself, I'm not a big fan of ICT concepts. If I ended up watching an ICT live stream, of course I'd be able to understand it at this point because of my education and knowledge in trading, but it's not something that would really stick strong to me. I understand the basics of supply and demand, those stronger thresholds, those higher time frames, understanding how markets really move. Samuel, good morning, brother man. I hope you're doing well. Hello and welcome. NVIDIA looks like it might finally be trying to break its red streak. Take a look at NVIDIA down here. Let's look at our daily time frame. Yep, look at this. NVIDIA had 7 red days. It says 6. 1, 2, 3, 4, 5, 6. It was 7, so I don't know why it says 6 candles. But 7 red days in a row. Today would be 8. Looks like it's trying to hold. Now what I can do, and what you can do too, is mark out the open price today on NVIDIA. Try to find those settings there. Go to template, open. If NVIDIA breaks back below this level, I'm going to have a lot more confidence that we're holding to the downside. Because I like to use equities to gauge momentum and strength on ES and NQ. I just want to know, is there an indicator or something on TradingView that shows the same support and resistance like on market? No, so there's no market indicator. There is a Chrome extension for MRKT. It doesn't give the support and resistance levels, but it does give you, in my opinion, what's more important, which is the live news, the calendar, and the bias. So when it does come to the key levels and support and resistance on market, it's cool to help use them in confluence with your own technical analysis, but you don't want to just be like, okay, MRKT says support at 46, 43. As soon as we hit that level, I'm buying. You want these levels to co-align with your own due diligence, with your own price levels. You do not want to just blindly be taking trades where you're not going to be learning from it, right? Your whole goal as a beginner trader is to not figure out how to make money, but it's to understand how markets are moving, to understand why things occur, and understand how to build your own foundation and proper structure so you could repeat it. Repeatability equals consistency. Now, I've never used volume profile. If you can explain a bit, please. Yeah, absolutely. Absolutely. So if you haven't used volume profile before, I'm sure you're at least familiar with just classic volume. Classic volume is what's considered the volume on the subgraph down here. Now, the volume on the subgraph down here tells you how much volume was traded on that specific candle. It doesn't tell you if it's buy volume. It doesn't tell you if it's sell volume. It just shows you total volume in that candle. Even though, yes, it's green, yes, this one's red, that doesn't mean buy or sell. It's just showing you the color of whatever that color of the candle was. With that being said, that shows you how much volume was traded in this candle. It gives you no information of how much volume was traded at each price level. Volume profile, on the other hand, shows you how much volume was traded at a specific price level. So if we were looking at right here, you see this dotted orange line? This dotted orange line, I'm going to put a regular trend line on it right here. This, let's make it orange, make it a little thicker, nice and thick. This is where most of the volume, the heaviest amount of volume was traded today so far. This is our point of control. This is where the most volume was traded today. Then if you look, you see this dashed line right here, this dashed line down here, and you see how this is bright white and then it goes light gray. This is considered our value area high, dotted line, our value area low, the dotted line. The value area high in between that value area high and value area low is where 70% of the volume was created. So a lot of times we will range between that 70%. So we don't want to be taking trades when we're in between that value area high and low. We want to look for extensions out of it to reverse back into it. And we also want to see and remember that it is going to constantly be shifting and moving. Kevin Decatur, oh, I got you, bro. I'm going to send it also. Guys, join our Market AI community over here. Look, Nalab's always working, man. W to Nalab, bro. Such a hard worker, dude. Whole team's full of hard workers, man. Seb, Nalab, Seb Squared, Jack, everybody, man. Everyone. Justin, of course, Jeeve. Oh, I just posted that. I posted that in the market chat by accident. Kev, is the orange line the point of control? Yes, so the orange line is point of control. That's where the most volume was traded today. Now, I personally don't like to use point of control as an entry level. I like to use point of control as a target level, right? For price to return back to that area. Does that mean if we're away from it, I should instantly be looking for a long position targeting, or I should instantly be looking for a short position targeting? No. It's just a key level to keep an eye on that's backed by volume. So it's got a good reason behind it. It's not just a random level. It's backed by volume. Volume moves markets. Awesome, guys. Sweets. Very sweet, guys. Guys, run the like button up. We are about a few likes off of 50. You guys are amazing. Let's see what gold's doing. Look at this, guys. Gold. This is why we don't just short random lows. We're trying to hold this support zone still. I'm still looking for us to try to pivot outside of this demand zone, break some higher highs, and then continue. We took out these lows over here. We're going to bring these back over here. Is the blue line VWAP? Yes, sir. You know it. You know it. Blue line is VWAP. Volume weighted average price. And guess what? Volume weighted average price. Volume profile. These indicators, these tools, they go hand in hand and they complement each other because they're all volume based. If you use a volume profile and then you use something like a MACD or RSI, you're going to get mixed signals. RSI might be like, we're overbought. Meanwhile, your volume profile is like, no, we have a low volume shelf right here. So here's another little bit of a trick for you guys. You see this extreme low volume area and then how volume picks up very heavy? These low volume areas tend to work as imbalances in the market. Now, these aren't low volume areas because nobody was interested in buying there, because it's in the middle of where all the volume is. So these low volume areas are there because price moved too quickly through there that it wasn't able to contract enough volume. So it creates that imbalance. So all those traders who were not able to get filled in that area have passive orders sitting there. So when price is above one of the or below one of these low volume areas, we look to see, can price come back, fill those orders, and react back lower. That's what we like to look for in those low volume areas and low volume areas. Cool. Awesome, guys. Sweet, guys. You're getting some sauce today. Who doesn't like a little extra trading sauce? It's great. Don't forget, let's look at a 15-minute time frame. See if anything's starting to shift. I see we've now had 3 15-minute green candles in a row outside of this demand zone. I'd possibly want to see a shift higher, pullback, and continuation. 30-minute time frame also shifting a bit more bullish. Hourly had a bit more weakness in that last hourly. So again, if I wanted to be a bit more of a patient trader, and a lot more of a patient trader, I should say, I'm going to let this hourly close right here, which does take another 40 minutes. And I'm going to see, can we close green, close outside of this zone? Then I'm going to look for the retest and continuation. I'll buy it after that. But if we don't, and in 40 minutes is plenty of time for gold to start selling back off again, I don't want to be the impatient trader that tries to buy after such a more bearish 1 hour candle. Higher time frame has a lot more significance than a lower time frame. Amazing, guys. Amazing, man. Guys, a few likes away, man. Run it up to 50 and I'll stop asking. Let's take a look at the ES. NASDAQ rejecting. Look at this 30-minute basing candle, right? So a rejection candle here on the 30-minute would usually give me the idea of, boom, sell-off. We close somewhere lower over here on NASDAQ. I'd look for continuation back lower. Pull up the ES over here. ES at a key level, value area low right now, and gamma exposure level. So we've got sort of a lot starting to give us some support down here. Cool, guys. Cool. Awesome, man. Awesome. Guys, if you have any questions, let me know in the comments. Always happy to help. I was wondering why my VIX chart was so weird. It's because we had this huge gap huge push up on the VIX right off the open. ES value area. So look, when we see volume is just consistent all around or inconsistent all around, that's our sign using the volume profile to stay the heck away. No trade zone. Let markets develop. Let more volume hit the markets. Right now, we're seeing a lot less volume today. Take a look at this too. Look at the volume we started with today compared to other days. So right here, I'm going to draw out a trend line. And this is how much volume we've had today so far. Let's see. Here we go. Yep, total volume is going to show me right over here. Total volume on our first 15-minute chart was 60K. Previously, it was, 85,000. Before that, it was also 83,000. Before that, it was 85,000. So it seems like that 80,000, even over here, 90,000. And then today we only had 60,000. That's a decline in volume. That is market participants starting to sit back. If market participants, not just day traders, when we talk about market participants, we're not talking about day traders. We're talking about institutions. When we talk about volume in the markets, volume profile, volume analysis, we're talking about institutional volume. Retail volume is not strong enough to significantly show itself at these areas. Well, if institutions don't want to trade these markets with heavier volume, why would we want to trade it at all? Now, institutions do still have to be putting volume somewhere. They can't just sit cash. Think of it as an investor standpoint. If you invested with this big bank and they were like, oh, we're sitting cash this month, give me my money back then. I'll sit cash myself, So be patient. Let it play out. Recognize volume patterns, recognize fundamental patterns, and recognize what could be coming up that could be causing this low volume. We don't just have low volume because institutions felt like taking the day off. No, we have low volume because we're anticipating something. Well, what are we anticipating? Let's look at our economic calendar. Oh, how do you like that? We have a speech. Fed Reserve Chair Kevin Boring Warsh will deliver his first speech at Jackson Hole Economic Symposium. Boom, right there. We figured out what we're anticipating this week. It's Tuesday. The speech is on Friday. Unless PCE comes out higher or lower than anticipated, we're going to remain within this range. Let's take a look at PCE. Let's prepare for PCE, guys. I have one because I'm starting to get really into news and everything. What would you say is the most important thing to learn first? Most important thing to learn first in a sense of what? Like using the economic calendar, using the market AI dashboard? Because market AI, the market dashboard is extremely helpful for everything fundamentals. Economic events, data points, news headlines that come out. What's shifting and moving markets and the narrative of the markets. So, to get started, I would most likely say to get started with the economic calendar, as this is sort of the anchor to the rest of everything else. Now, news headlines are going to be impacted separately. Everything has its own rhyme or reason. We have to know that. But economic events and understanding how these events actually come out and what it means for monetary policy is going to put you ahead of 80% of traders already, like right off the bat, because a lot of traders, they'll go on something like Forex Factory and it's just absolute garbage. You go to something like Market, it gives you the forecast, it gives you the prior, it gives you a minimum and maximum range, and then it gives you a playbook. How nice is that? It's almost like walking you through it, like hand to hand. You're holding hands with the market, with market. How cool is that? Right now, we're looking at PCE, this core PCE year over year, and it seems as though we're looking at a 3.3%, 77% chance. Oh, good, they fixed it. Perfect. So 77% chance we come in at that 3.3%. Guess what? That's right on forecast. That's ranging. If we come on as expected, guess what? We're going to range again tomorrow. And we're going to just have to wait till we get the data release on Friday and not so much the data release, but the actual speech on Friday. Here goes ES. Found demand near this 15. Found a call wall. Found the value area high. So here's our AND theory stepping in here on the ES. But guess what? My AND theory, I don't give a damn about if we're in range-bound markets. I can't stress that enough. If markets are telling us we're not trending, why would we be the trader that says, oh, well, this has to be the low? What do you mean this has to be the low? You can't predict that. You don't control markets. We want to react. We want to predict when we have the right information. We want to react when we see the information is ranging. I don't want to have the exact prediction, but be able to expect something would be nice. No, just fundamentals in general, because I know what they are, but how they are going to act in the market, I don't know. So a good example of this, if we take a look at oil, oil has been a real driver of inflation lately. So when we had our ceasefire deal hit around the end of May into June, we had this big decline in oil. Oil sold off 30%. Very nice move. Now, oil coming lower, we were able to predict and expect that CPI would come lower. We take a look at our market terminal here. We're on our economic calendar. We could look at, let's see if we could find it. CPI. See if we could find CPI. Let's see if we could guesstimate the exact date. It's usually the first week of the month. I'm looking for not the 3.4 reading. I'm looking for the 3.5 reading. CPI. No, this is the non-farm payroll. Oh, here it is. Yeah, I was right. Bang, love to see it. August 12th, CPI. No, this was the 3.4% reading one. Let's go back one more month. So 3.4% was on expectations. Prior was 3.5. If we look back one more time, so we go to July, we're going to do the same bit of a range right there. First week or two, apply. Okay, CPI, initial jobless claims, NFP, and right down over CPI. Wednesday. No, really, not this Wednesday. Interesting. What was it, the third Wednesday? Extended out a little bit more. Yeah, I gotta say, man, they must have updated something because this loads super quick now. That is amazing. Here it is, CPI. Core CPI, right here, 3.5. Forecast was 3.8. So we knew we were going to come lower on CPI because, look, prior was 4.2. This is when inflation peaked at 4.2%. That is when oil was flying. Let's see if we can pull that up real quick. That was when oil was all the way up here. We sold off some more. We had the ceasefire. Oil sold off even more aggressively, bringing inflation expectations lower. So what happened? Inflation expectations went from prior of 4.2% to forecast of 3.8, but because of how aggressive oil sold off, we came in at 3.5%. That gave us such a beautiful and strong move on, you guessed it, the ES, the NASDAQ, gold. So that's what we want to look for. We want to look for key insights. We want to look for things that are currently impacting inflation. And oil was what was currently impacting inflation. And guess what happened? Here comes July, the month of July right here. We moved higher, and then we moved a little lower, and we closed July out right here. Up a little bit on oil, but it was still lower than previous. So instead of going from 3.5 to 3%, we went from 3.5 to 3.4. We barely moved lower, came right on forecast. It did not give us that big of a move, and we were able to anticipate that. You guys could join me for market in the morning. I was saying I'm not expecting inflation to come much lower aggressively again because oil didn't continue to drop. That's exactly how it came out. It's exactly what happened in the markets and how inflation came in. Samuel, I hope that helped, bro. Let me know in the comments if you do have any other specific questions or if maybe I misunderstood the question, but I do hope that helped. Guys, if you're learning something here today, please hit that like button. We don't ask you to throw money at us. We ask you to just hit that like button, show some love. Join me every day, Monday through Friday, 8:20 to 10:30. It is 10:30 right now. So any last minute questions, drop it in the comments. We're at 46 likes, guys. I really need you to run that up. Gotta hit 50. 50. But I'm going to wait a sec, let you guys answer if you have any other questions. We could take a look at our other assets right now, see what NQ is doing, see what ES is doing, see what gold more specifically is doing. So look at that. Aren't we glad whoa. Okay. What's going on? There's that 4-hour demand on NASDAQ. There's that volume kicking in. Interesting. Any headlines there? Without a fundamental knowledge, it will go above your head. Yeah, exactly. Yeah, it's awesome, man. Thank you. I will listen again this part if I can, but I'll look into that. Yeah, I got you, bro. Absolutely. Listen, if you have any other questions too, by the way, look at this reaction to this opening price level, this 4-hour demand. That was a perfect move right there. That's 70 points in the profit. If you have any questions on how fundamentals move markets, you can literally ask market. You can ask, like, what was your question? Let's see. So let's ask it. Your first question was, I'm starting to get really into news and everything. What would you say is the most important thing to learn first? I'm starting to get really into news and everything. What would you say is the most important thing to learn first? We could ask market. How cool is that? Yeah, volume profile is a great tool too, right? So I like to see it as fundamentals, give us an idea of what the institutions are seeing and reading. And then the volume is the complement of that. Volume is the confirmation of that. Guys, 47 likes, man. Keep running it up, and then we'll end the stream. The most important thing to learn first is how to connect news to price. Not reading headlines, but understanding which stories actually move markets and why. China sold us treasury bonds, that's why. How did that affect the dollar? I'm going to check that in 1 second. High impact economic headlines, CPI, NFP, FOMC decisions, jobless claims. These are scheduled, measurable, and move every major asset when they print. The transmission mechanism. A headline only matters if you know the path of hot CPI, higher rate expectations, stronger dollar plus weaker gold. This is like talking to an lab right here. Like, that's how cool Ask Market is. Catalyst versus noise. 90% of headlines don't move price. The other 10% are your edge. Levels are the language. Awesome. And we could take a look back at our headlines. See, Trump's been informed by a United States Navy that all mines have been removed and or detonated from within international waters of Strait of Hormuz. Okay. Yo. That jeez, bro. That's crazy, man. To a tick. It's 100 points right there from the pre-market plan. Talk about patience. Good job, guys. Good job. Well done. All right, everybody. That's a wrap for today's Market in the Morning. I hope you enjoyed it. We will be back. Tomorrow is Wednesday. Some more headlines coming in right now, too. Trump says Space Force monitors straight. Pickaxe Mountain warns of zero tolerance for mine placement. I'm not seeing the China headlines you guys are referring to. I'm sure it's there. Like, not that I don't trust you guys. I just don't see it on MRKT at the moment. But I'm sure it'll come out. All right, ladies and gentlemen, have a great rest of your day. If you haven't already, smash that like button. We're literally 1 like away from 50. You guys are legends. I appreciate you all for being here. Every day I come on, and my goal is to help educate you and help you get 1% better as a trader, whether it's diving more into fundamentals, teaching you guys about volume analysis, or whatever the case may be, market structure, whatever you guys need. But guys, have a great rest of your day. Don't risk more than you're willing to lose. Use Ask Market for any questions you might have. And I will see you all tomorrow. Later.